Hi, Trip here. Today I'm doing a webinar for you on investing, and I'll cover analyzing different types of investments. My focus today will be on index funds and individual stocks and how to assess whether or not they're good investments for you. So on the screen here, I have a very popular index fund called the Vanguard Total Market Stock ETF, VTI. This is one of my favorite finance websites, Yahoo Finance. I use it often to evaluate potential investments. So let's just go through everything on this page, and I'll explain what all these numbers mean. So this VTI is called a ticker, and its current price per share is $117.23. It shows you on the most recent trading day it went up 37 cents, which was about 1/3%. If I scroll down a little bit here, there's a previous close, which tells you what its price was at the close of the prior trading day, what it opened at. So this is what it opened at on Friday. The bid and the ask is what people are offering to buy it at and what people who own it are looking to sell it at. And the difference between the two numbers, in this case it's just 1 cent, that's called a spread. Now, the wider the spread, the harder it is for that particular stock or index fund to be bought and sold, for the buyers and sellers to come to an agreement on price. So a tight spread means it's easy to trade at the price you'd expect. The next item is the days range. That gives you an idea of how wide a range it's been trading on this specific trading day. Pretty tight range here, $116.64 to $117.51. The 52-week range tells you what this investment has traded for in the last year. It's had a low of $91.58 and a high of $117.79. You can see that the current price is pretty close to the 52-week high. If we just pull out a calculator here, we can figure out what the difference is. In the last year, so if you had managed to catch this investment right at the bottom, which you'd be extremely lucky to do, you would have gained a little over 28% if you've held it and you managed to sell it right at the top. Now, nobody's that skilled. Don't expect to accomplish that, but it's good to just be able to compute what the spread is between the high and the low of the 52-week range. I like to usually buy investments when they're closer to the bottom of their 52-week range. Not always possible, but that's my preference. Volume tells you how many shares of the investment traded on the most recent trading day. Here it's a little over 2.3 million. Average volume tells you on the average trading day what the volume is. Net assets, that refers to basically the total market capitalization of this investment. In this case, there's nearly $500 billion out there in VTI. Now, VTI is a type of an index fund, and most index funds do a market capitalization approach. And what that means in layman's terms is the bigger companies, which represent a bigger share of the U.S. economy, are more highly represented in an index fund that's market cap based than smaller companies. So a really, really large bank like JP Morgan Chase would have a higher percentage of assets in VTI than a much smaller bank. Your local bank might not even show up at all if it's not one of these nationwide banks. NAV is a number that it's kind of like the median consensus estimate among all the analysts of where they expect this investment to be a year from today. It's just a guess. PE ratio, in this case for this index fund, it's listed as NA. I'll go into this in more specifics when we analyze individual stocks. Yield. Yield is a really important measure for me. It tells me how much return I'm going to get on my money that I invest per year, and it's in the form of dividend payments, which is one type of passive income. I really love passive income, and I'm currently getting over $2,000 a month in passive income. It's income that happens whether I work or not. So I'm a big fan of passive income. In this case, the yield is an average yield amongst all the companies which comprise this index fund. So some might have high yield, some might not pay any dividend at all, and they'd have no yield. Year-to-date return. This refers to if you, so ignore this year, 2017. This tells you if you bought it at the beginning of 2016, what return you got on your investment holding it to the end of 2016. In this case, it's nearly 13%. The beta. This is a measure of how much the investment fluctuates. The higher the beta number, the more it will fluctuate, the more volatile it is. A lower beta is a less volatile investment. A number above 1 is on the more volatile side. A number below 1 is less volatile. I've seen numbers anywhere from like 0.75 to close to 2. So 1.02 isn't all that volatile in terms of a stock investment. Expense ratio, this tells you how much it costs to hold this investment. So index funds and ETFs, they have fund managers, and these fund managers put them together, and they get paid to build these funds so that investors can easily invest into them. So this tells you how much they're getting paid. If you were to invest $10,000 into this fund, you would be paying an expense ratio every year of 0.05. So expressed as a percentage, it's 2 extra zeros. You'd pay $5 every year on your $10,000 investment to hold this fund. That's really, really cheap in terms of index funds. Vanguard does a very great job at keeping their expense ratios low. Inception date, that tells you when the fund was created. This right side tells you what are the top 10 holdings in this index fund. Most of these names should be familiar to you. Apple, Microsoft, ExxonMobil, Johnson & Johnson, Amazon, Berkshire Hathaway, JP Morgan Chase, General Electric, Facebook, Wells Fargo. I think most people would be familiar with at least 7 of these names, maybe all 10. And then down here, there's some information about what this investment is. So down here in the fund summary, it tells a little bit about what this index fund is. It says it's designed to track. It says that it's designed to track to the performance of the U.S. total market index, and that it's going to keep approximately 100% of the investable money in the U.S. stock market, and that will include large, mid, small, and micro cap stocks. If we go over to this holdings tab here, you can actually find out. Well, it says 99.5% of this money that you invest is invested in stocks, 0% in bonds. So where's that other 0.5%? Well, it's likely in cash, meaning that the fund manager will sometimes sell a little bit of the stock and buy maybe some other stock, but they might be holding some cash in between. And there's this concept called turnover rate. Index funds tend to have very, very low turnover rates, meaning things aren't being bought and sold in it frequently. Mutual funds tend to have much higher turnover rates and also much higher expense ratios. It costs you more to own a mutual fund than it does to own a index fund. This information here, the sector weightings, tells you for this particular index which sectors of the U.S. economy it invests in more. So you can see the high ones, approximately 12% in consumer cyclical, 16% in financial services, 13% in healthcare, and 18% in technology, and 12% in industrials. It just gives you an idea of what types of companies it invests in. So this is fairly representative of the U.S. economy as a whole. Now, I don't like to get all my information from one source. So let's just do a quick cross-reference here and do a Google search for VTI prospectus. Prospectus is a very key term when you're analyzing investments. It's definitely a document you want to be looking at. It tells you what the fund is made up of, and what its risks are, what its costs are. So this is the Vanguard website, and it is the prospectus for VTI. Let's make this a little bigger. So it shows the same information as what we were seeing on Yahoo Finance. It shows a yield of close to 2%. It shows you what the current price is, which is exactly the same. It shows you the exact same expense ratio of 0.05%. It tells you it's a domestic large blend. Most of the companies within it are large cap companies, and I'll tell you later what that means. Here we are, the market capitalization picture here. So this central tendency dot tells you most of the companies within this index fund are large, and that it tends to center towards the blend between value and growth. Value companies are typically cheaper companies which pay better dividends. Growth stocks are those companies which the investors are expecting earnings to grow and continue to grow nicely. So they tend to have higher valuations and pay lower dividends. You can see that its central tendency is in the blend, but it's slightly shifted towards the value side rather than the growth side. I'm much a value investor myself, so I would prefer it not be over on the growth side. But you can see that it does hold some mid and small caps as well. And then it also shows the top 10 holdings here, and that those comprise 15.4% of the assets. Now, the lower this number is, the better diversified your fund is. The higher the number for your top 10 holdings, the less diversified your fund is. Let's look over here and see what does it comprise of. That should be the portfolio tab. You can see some more detailed information than what we were able to access on Yahoo Finance. We can see that 38.6% is in large companies, 26.6% in medium to large. So most of the money you invest in VTI would be in large companies. And then there's a bit less in small and medium companies. So there are other indexes that Vanguard runs that would be more focused on medium and small companies. And the smaller the company, the greater the potential growth rate that it might have. It tends to be more volatile, but it can also be more rewarding if you're willing to hold it for the long term. If I go back over to Yahoo Finance, you'll see this nifty little section here that says people also watch. And You can see some other symbols, some other ticker symbols that people would also watch if they're watching VTI. All these ones that start with V's are also Vanguard index funds. So VWO is an emerging markets index fund. It's non-US stocks. VNQ is a US real estate investment trust. BND, it's some type of bond fund. I'm not certain exactly which one. VEU is international markets, which I believe are developed markets. Don't hold me to that. I'm not certain. But these are things that a lot of investors who use Yahoo Finance, they might check out these other symbols if they've been looking at this one. Now I'm going to go into how to assess an individual stock. So let's look at some of the individual stocks which make up VTI. So here are the top 10 stocks. I mentioned these before, and I would just right click on all these to open them up in new tabs. But I'm going to actually continue the analysis of individual stocks in part 2 of my webinar. So I would really appreciate it if you tune in for that one. I'll dig into the details of assessing an individual stock and whether it might be a good investment for you. Please subscribe to my channel so that you can follow up on future webinars, and feel free to share it with anybody that you think might be helped by learning how to invest. Thank you so much for tuning in. And this was Trip at financiallypossible.com.